Do it.
Let's see. Did it work here? Going live. All right, guys. We are live. Yay! Welcome back. It's been crazy today, but welcome back. Guys, we are ATX Homegirls, and we have a special guest with us tonight. But before we get to her, I want to go ahead and introduce us and talk to you a little bit about us and talk about our special guest and then get into it. So go ahead and let's introduce to the audience who we are. Melissa, you want to start?
Yes. Hey, guys. Thanks for joining us again, ATX Homegirls. As you know, if you don't know, we are here every other Wednesday at 7 p.m. Central Standard Time. And our format is just to talk about Austin real estate market and all the things that would benefit buyers, sellers, investors, and anything real estate related. We keep our conversation light, fun, and funky, but informative. So anyway, awesome. My name's Melissa, and I've been in real estate for, 10 years or so. And, this wild idea we came up with ATX Homegirls, we're hoping to get some traction on it. So please like, share, and subscribe. Yes. I am a residential real estate realtor. I help buyers, sellers, and investors. I can also help you with land. And I'm happily married. I have 2 kids and a grandbaby. If you see me on Facebook, you'll see my granddaughter everywhere, so you know how proud we are and how much we love her.
Awesome.
So, anyway, we're here. Thanks for joining us.
Yeah, thanks, Melissa. Kina?
Yeah, my name is Kina. I've been a realtor for a couple of years now. I primarily worked in North Austin area. And I'd say the majority of my clients are first-time home buyers, but I'm open to working with, of course, anybody and everybody and in whatever area of Austin. I have one daughter who's almost 3 and one big old dog that lives with us as well.
Aww.
And that's me.
Yay! Thanks, Kina. Amanda?
Hi, I'm Amanda. I'm fairly new to real estate. However, I was a property manager for 11 plus years. I'm a mom of 4, so I'm pretty busy. I currently have a pretty good listing of land. My main focus primarily has been land. But yeah, that's me.
Awesome. Thanks, Amanda. And guys, I'm Liza Brazel. I'm also a realtor here in the greater Austin area, primarily focused on residential sales, helping home buyers and sellers. So I'm going to move on to our special guest here. Becca, you want to go ahead and introduce yourself?
Hi, yes. Thanks for having me, y'all. Glad to join some
last
females.
Minute.
So my name is Becca. I am a loan officer with Blue Spot Home Loans. And so we are the web-based consumer direct division of Cherry Creek Mortgage. I've been doing this now for almost a year and a half at the moment. But it's been a whirlwind of an 18 months there with the refinance boom moving into a purchase boom. So yes. Been a lot of fun and looking forward to sharing some tidbits with y'all.
Yes, thank you so much. Awesome. So again, guys, we are ATX Homegirls, a diverse group of local realtors here in the greater Austin area. We're here to bring you valuable content that you could find useful, and we do try every other week on Wednesdays at 7 p.m. to bring in a special guest to get this organic conversation going. Again, guys, this is not scripted. It's all an organic conversation. The way I see it is that some passerbys are just eavesdropping on some valuable information in regards to real estate here in the greater Austin area. So let's talk about the market. Kina, I don't know if you wanted to pull up our market stats for February.
Yes, I actually have them ready.
Yay. So it's been crazy because last time, if you guys recall, when we discussed the market, now the stats for March, March is still here. Those stats are not going to be available until sometime in April. So all we have to go off of is the statistics for February. But if you guys recall, in January, what that median and average price points were. So they did go up. market is
Yep.
still going strong. And Kina, I don't know if you want to go ahead and fill us in on that.
Yeah, I was pretty shocked, but I guess not so shocked because this just keeps happening month
Right.
after month. But yeah, last month we were at 550,000. This is for the city of Austin, median price. Now we're sitting at 565. So that's like a $15,000 increase. And I think it's safe to say, as you guys are putting in offers for your clients, we're still seeing almost every listing, we're seeing multiple offers, and it's just driving those prices further and further as we go further into the month. So as Lee said, it's to be expected, but still a little bit of sticker shock, I think, for a lot of us.
Yeah, you know what's crazy is that and Becca, tell me if I'm wrong here. I think buyers were trying to hold off because the interest rates were, increasing. We did see some interest rate hikes, and some have reached historical highs, I think, recently. But I think a lot of buyers were trying to wait to see if that would deter this, I don't know, how do I put it, the market cooling off a little bit. And we haven't seen that be the case. So what do you think, Becca? What are you seeing?
I'm seeing a change in the borrowers that we're getting. Last year we were getting a lot of borrowers I've had a few borrowers that have gotten priced out because of the interest rate hikes.
Yeah.
Unfortunately, they were looking at that, 40 to 45% debt to income ratio. And now they're maxed out because the interest rates have increased, unfortunately, or they've had to adjust the price range that they're looking at. But I've also seen a lot of borrowers now come back into the market because they're hoping that it's slowed down a little bit. So I actually had one borrower that I was doing a pre-approval with. I've been working with them since April of last year. They took a few month break and they just went under contract. And they, it was one of those, they finally came back in and they got it. So
yes,
it's, it's the interest rate increases is good and bad. So there's pros and cons to it, definitely.
No, absolutely. I wasn't sure what you're doing for your clients to help them be placed in a better position to win in this market. If you want to go ahead and maybe discuss that a little bit more in detail.
Yeah, absolutely. So nowadays, and y'all can correct me if I'm wrong, but most realtors won't talk to borrowers unless they're pre-approved already. It's just there's no point in looking at houses without that pre-approval. But in addition to that pre-approval, we offer an underwritten pre-approval. So what that means is we get all of their documents from them. We verify their income, their cash to close. We have given them credit approval at that point. The only thing that can screw up the deal at that point is if the inspection comes back wonky, the appraisal comes in super low and they're just not willing to do that appraisal pay gap. But otherwise at that point, we've verified everything. So they're good. And that gives them the benefit that we could do a 10-day closing at that point.
Oh my gosh.
Assuming we get the appraisal back.
Yeah.
So
that's awesome in this market.
A little asterisk there.
Yeah, girl.
I do have a question, Becca.
For sure.
Yes.
Can you tell me, and this also be for the buyers out there, because I know, they hear things, or maybe their friends or their coworkers or someone they know closed on a home quickly on a finance side, with a financed offer. Can you tell me in what situation you guys will approve or use a desktop appraisal? Is that not a thing anymore? Do you see it often or no?
So we do get them occasionally. So, if you may or may not be aware of it, Freddie Mac and Fannie Mae have a desktop underwriter that we run all of our files through. You will not get an appraisal waiver where we don't need to schedule an appraisal if you're doing less than a 20% down payment. It just doesn't happen. But the moment you start putting that 20% down, it does become a possibility. So that is an option. It's very rare, but it is a possibility.
Awesome.
Could you explain to the audience what a desktop appraisal is? They may not know.
Yeah, so all that is Freddie Mac and Fannie Mae have in their system a value that they deem reasonable for that property. So they have a database of all these properties with them. And so when we put in the purchase price and your down payment amount, they go through their system and it comes back and says, you know what? We don't need an appraisal to support this value. The information we have supports it, and you're good to go without the appraisal. So, but that only happens.
count on, but it does happen from time to time.
It does. I usually tell borrowers for purchases, it's probably 1 out of 50 that I get one. So it's a very rare occasion.
For sure. And I had a question, Becca, on that matter with not knowing, because I know the interest rates, they're going up one day and then going up higher one day and then they're neutral some days. So what are you doing? And here's the thing, I think the fear that now with buyers going under contract and in that interim phase, right, with the interest rates going up and down, are you able to lock in buyers and the interest rate sooner than, I know some lenders have some stipulations that they can't lock in the rate at certain time frames. I don't know if that's different for you, if you're able to lock them in sooner. Tell us a little bit more about that.
Yeah, so the lock period is going to vary lender to lender. For Blue Spot, the longest we can do an initial rate lock for is 60 days, and then we're able to do an extension for up to 30 days after that. Now that extension does come at a price. It's 0.02% of the loan amount per day. But the absolute maximum we can have that rate locked is 90 days. So, for instance, a lot of people are on new builds, so they want to lock it now. But as we all know, the new build market have delays up the wazoo.
Yeah.
So I usually tell them to wait until they're at least at that 60-day mark, because that then gives us that 30-day wiggle room in case of delays. And builders usually have a pretty good understanding of when the closing date will be within that 2-month mark. In regards to locking a rate, we do need you to be under contract to lock a rate. And the reason being is because it does cost us money to lock a rate. So if you're putting out offers and you want to lock a rate because you're hoping you're going to get this offer, well, we all know in this market, putting an offer in is not a guarantee. Right. So you do have to have an executed contract. We will take, if you've been verbally accepted, we can lock you in then at that point and then just get the executed contract. But you'd have to have at least an acceptance of some sort, like a good faith acceptance.
Exactly. No, that's crazy. So I mean, in essence, what you're saying is that as soon as a buyer goes under contract and we have an executed contract, you're able to lock them in right away.
We can, especially if they're pre-approved. It's just one button. That's all we got to push.
Wow, that's awesome. I think that would give buyers hope with that uncertainty of where are we at, right? That's awesome that you're able to provide that for your clients. So I think that's very key to be able to be in not only in a winning situation or in a better situation to win an offer, but also for the buyers. And I think a lot has been going on to where buyers feel like they're giving everything, paying higher interest rates, paying higher price rates. I mean, everything, the terms are crazy, that I think this is something that would give them some comfort to when they do close on the home, they at least have that certainty that they have that rate locked.
Yes, absolutely. And we do also, with that underwritten pre-approval that we offer, with loan amounts of $300,000 or more, we do also offer a $500 lender credit, just as a thank you for going through that pre-approval process with us. It makes our job easier once you do go under contract, and it's free money for you.
Yeah, for sure. That's awesome.
Like free.
I know, right? Who doesn't like free, especially in this market?
Yes.
That's awesome. So, okay. So with, what are you, I don't know if you've had some, I want to talk a little bit more about the 10-day close. I know that with the 10-day close, that also seems attractive because it's super, super close to what a cash offer, right along those terms. I mean, cash offers can be super fast, and I've seen cash offers that they're normal 30 days or 20 days or 10 days or 2 weeks, right? It can be anything. But tell me a little bit more about that 10-day period. And I know you mentioned a little bit that we would have to have them underwritten and obviously an appraisal done on time. But is there anything else that you've had your buyers do to strengthen their offer to be able to do that, right? Because I know it's a team effort on the buyer's end, on the lender's end, realtor, all of us, working as a team to make this happen. But tell us a little bit more about that.
Yeah, so that 10-day, the reason why it's 10 days is because legally that's as fast as you're able to close. So 10 days is with all of those legal documents that are required and the federally mandated waiting periods and all that. So 10 days is that federally fast as we can close.
Right.
You do need to have that underwritten pre-approval done ahead of time. That is not going to be, condos, I would never offer a 10-day close for condos, just with the new condo document requirements that have taken place. It's just setting us up for failure for that. But, you know, having all of your ducks in a row, it's going to really rely on the borrower getting us the documents in time. So as soon as you're under contract, getting us that executed contract, you need to basically have your homeowner's insurance policy already picked out on who you're proceeding with. So all you need to do is call the agent and be like, listen, I want to bind this insurance policy. Let me get you the mortgagee clause, and then we're good to go. And then at that point, it's just the appraisal is the limiting factor. And as soon as we get that in, you know, there's a waiver that you can do, so you can waive the 3-day waiting period for receiving the appraisal to closing. And yeah, it's just being communicative and being on top of having your documents and being a good partner to us.
Absolutely. I agree with you. I mean, it seems almost as if not only besides being underwritten, even with the property, I mean, you would have, I would imagine, we would absolutely need a survey in hand, not one that needs to be ordered, right? Because that takes time too, and then we're dependent or at the mercy of the surveyor to be able to do that on time. But I would imagine having the survey ready, having all the documents ready, a reliable title company that can get the commitment out soon, the buyer having all their documents ready to you, because when you call, they need to be answering to turn those documents in. So, and then the insurance as well. So it seems like everything now has to be done way up front. That way you're setting yourself up for success. I mean, wouldn't you guys agree?
Yes. So I was going to chime in anyway on that, but if we're talking about the things that buyers are doing to win in this market, or what buyers are doing to win in this market, I really feel like having a good relationship with your lender and educating the buyer is key. It's now about what you're doing up front. Like literally before you even step foot in a house, you've talked extensively with your lender, you've educated yourself, you've set realistic expectations. If you have a good job and you have a good credit and you're ready to buy the home, that's like one step, right? Right? You're ready to play ball. What are some other things? Having the cash. If you're not using cash, maybe there's or you don't have a lot of cash, maybe there's a lender that offers a BPA program that may work. Like there's other things that you need to be doing or should be doing to help yourself win in the market, right?
Absolutely.
And a lot of it seems like it has to do with the prep on the lending side. Getting ready.
For sure. And it seems like you've been able to just streamline everything for your clients, so they're able not only to win but get to the closing table, right? Because that's another thing.
We have a great online borrower portal. So, you know, from the moment you submit your application, you have access to this online portal. And, you know, once I receive an application, I review it and we update what we call the homework list. And you'll see the full list of documents that are needed up front. So then you can just click and drag them to upload them onto the borrower portal. It's a secure borrower portal, so it's much more safe than just sending them via email and keeping it nice and secure. And then, you know, as soon as those are sent, our disclosures team, I think we're sending out initial disclosures within 24 hours. You know, the federally mandated time frame is within 3 days. Our disclosures team is on top of it. I think last month they might have been at 20 hours. I need to go back and double check that stat, but they're rocking it.
Wow.
So then as soon as those initial disclosures are sent out, signed and returned, we can immediately order that appraisal. And then at that point, your file gets, promoted over to processing. They prep it for its submission to underwriting. Then our underwriting team has a 46-hour turnaround time for that. So it's a very fast process, but it's all dependent on how thorough and upfront the borrower is. The borrowers that withhold information because they don't think it's important.
Right. Oh, it's okay.
We got a dog.
We got some doggies in the house.
The dogs keep going at it. They push open the door. So the borrowers that withhold information because they don't think it's important, I'm like, nope, you need to tell me because we're going to find it. That piece of property that you don't think is important because you don't own a mortgage on it, but you own it, we need to know about that. So
absolutely. I mean, gosh, I always tell buyers, you need to be very transparent. Now's not the time to think, oh, that's not going to affect me, or, you got just do everything you got to do, be transparent about it, because we're all trying to help, right? We're all trying to get you to a specific goal here. So
yes, when we ask for real estate owned, we're asking for real estate owned, not real estate finance.
Yeah.
And what also, I've had buyers that they're going to get a gift. When I say gift, we talk about, to help them purchase the home, down payment, some sort of gift that closed out with closing costs, whatever it is. But I, believe it or not, have had clients even recently in this market ask me to, we were writing, and this is what I mean about transparency, Liza, writing down an amount on the earnest money, which, really 1% doesn't feel like it's sufficient enough to win an offer in this market. But
No. Like 3%.
And then coming back and asking if we could reduce it later, and I'm like biting my nails. No, you can't do that. So being transparent with your lender and your realtor is important, because you say, okay, can you afford this house? Let's not go down let's not take this journey unless you're really, really ready. So transparency is really important. So Becca, can I ask you if you're seeing any really interesting creative things realtors are writing on contracts where you're seeing wow, that's cool, and I mean, hey, hadn't thought of that?
Let's see, interesting ones. I think what's becoming more common, and I'm sure you all are doing this too, is just that appraisal gap, where it's either the purchase price or up to a certain amount over the appraisal. I'm seeing that more and more now. I feel like probably 3 out of 5 contracts that I come across have that appraisal gap in it now.
Right.
I'm also, a lot of realtors are starting to use that shorter close time as well. I think before people were trying to sell their home before buying a new one. Yes. And I think now people are flipping it and they're selling before buying, or I'm sorry, they're buying before selling. So they want that quick close.
Yes.
Right.
So I think that's starting to get a little creative. I mean, in my own personal contract, it was the seller wanted to keep this teal barn door that was in the kitchen. And so I was like, sure, you can have the teal barn door. That's fine. You can keep that.
So the barn door, the lights, the fixture,
I'm going to take the stove.
I like that left cabinet.
Take the fridge from me.
So if you're a buyer and you're thinking about, we're kind of setting up the expectation of being realistic in this market. It is not uncommon for you, a buyer, to give everything to the seller or let them have. It's like, and I say the old days because we can just say 3 years ago, 2 years ago.
I know, right?
It was a real true negotiation process. Hey, can I have the washer, dryer, refrigerator? No, you can't have it. All right, fine. I'll give you the best deal I can. Then you go in and you have this inspection, and there's going to be deferred maintenance on an older home. So you're thinking, all right, let's get some concessions. Let's get some repairs. Hey, you know what? Don't worry about that handyman stuff. I'll take that refrigerator. But truly, nowadays, just so you're prepared, if you're in the market or you've had maybe some bad luck, I promise you, if you're working with an agent and you're like, man, they can't make it happen. They really are being honest when they say to you, you're really having to give a lot, right? So you're giving over ask, right? You're paying for title policy, which usually the sellers will pay that, but it's always negotiable, right? You can split it. You're paying title policy, you're paying over ask, you're coming to them hopefully fully underwritten, right? So that way they know that they're not having to wait to make sure that you can qualify. You're not asking for any of the appliances, so you're getting there and you still have to get a refrigerator, which is what you should prepare for.
Right.
You're trying to do the quickest close as possible, so that again, leaning on your lender to make sure that they can process you quickly, or like you say, order the appraisal. What else are we doing, guys?
There's
lease
a lot.
Back.
Lease backs.
Lease backs, those are big.
Becca knows about that.
I do. I gave a 90-day lease back to my seller, and that was.
So there you go, guys. You're giving it all, and if you feel like you're not getting a deal, all I can say is there's other buyers out there that don't care if they're getting a bargain or a deal. They just want a house.
Right.
So a kind of food for thought there. when we say who's winning in this market, it's the buyers that are willing to give a lot and just live with it because they're like, hey, I got a house.
Right.
You know?
That's what I was going to say earlier when Becca was talking about, the 10-day close being fully underwritten and all of that. It just speaks to how motivated that buyer is. If they're willing to put all of that out there up front and have that 10-day close, like that's such an advantage. And I feel like it just, like I said, speaks to the motivation of that buyer because it's just so helpful. And I think that some of them are still a little bit weary sometimes when they're making these offers. Like you said, Melissa, oh, can I afford this? Can I do this? Well, you already know. You've already taken care of all of that up front.
Yeah, for sure.
And I think it's funny when some of these sellers that are, being a little greedy or just asking for the moon, and then they have to become buyers and they're like, oh, crap.
Yeah.
It's happening back to me. So.
No, for
Yeah,
sure.
I think the listing side, it's so interesting, because I am pretty listing heavy and I'm looking at these offers and man, they're writing great offers and it's tough to make those phone calls and say, it just didn't cut it,
Yeah.
When in reality, they gave us a fantastic offer and then it comes down to dollars and cents, right? It comes down to, did they ask for a home warranty? Maybe it's, matching A and B and they look very similar. Well, they didn't ask for a home warranty. They're paying for the title policy. You guys, they're paying for all the HOA transfers. Just everything, like they're giving everything. And then you have this buyer over here that's financed, and they're not cash, but they're financing great terms. But they maybe can't afford to do those little things. So tuck away some extra money or maybe not, be a little more flexible. But it is interesting to see the sellers. I don't want to use greed as a word, but just very ambitious because they listen, they watch the news, they hear,
Right.
and their neighbor or their friend or their coworker or somebody at the church. And, the household in an hour and they got 50,000 over ass. Like every neighborhood's different. But yes, if you're a seller, you're winning in this market. If you're a buyer, you're winning if you're willing to be flexible and, just give a little bit more or give it all.
Yeah, for sure. And what I was going to say to that, Melissa, this is why I like having these real conversations about what's happening in the market, because it kind of gives you an insight, especially for the buyers out there that are watching, that this is what buyers are doing now, right? So if you're thinking about buying, you're in the process or you're actively looking, these are good nuggets to take in, gold nuggets, and start having these terms in mind, right? Okay, well, if I'm financing, maybe I need to get with Becca so she can get me that 10-day close, lock my rate in. Now I know I need to get my homeowner's insurance, up front, have all my documents up front, right? Start thinking about maybe high earnest, high option, like line up an inspector. Start thinking about all these terms because they do matter. And at the end of the day, the reason it matters is, like Melissa said on the listing side, that sellers do, when everything looks the same, it's going to boil down. It's going to boil down to one little tiny thing that could have made the difference. So yeah, thank you guys for sharing that, because these are real stories. They're not fake. We're not making it up. So yeah, for sure. So I don't know, Becca, if you've had anything crazy happen or where you've had maybe buyer or buyers that have submitted so many offers and finally, and I know you mentioned one case where they finally won an offer because they took a break and then came back, but I wasn't sure if you still have like maybe a buyer or buyers that are still submitting offers, or maybe they're struggling a little bit.
Yeah, I definitely do. I have quite a few, pre-approvals are valid we like to tell people for 90 days because your credit report expires at 120 days. So that kind of gives us that last 30 days to close the loan. And I do have quite a few, pre-approved borrowers that are still looking and they're getting close to that 90 days. Right. The good thing is that pre-approval doesn't expire. We just have to repool your credit at that point. But they're, I'm licensed in quite a few different states, not just Texas. And so I will say, the New Mexico and Oklahoma market seem to be a little bit easier. They tend to not be pre-approved with me just as long, but the Texas, Florida, and California markets are definitely more challenging.
Yeah.
And those borrowers though, I feel like at least the one that just recently went under contract, they got it because of their appraisal gap that they offered, that, they were willing to, I'm not sure if they necessarily had the highest offer, but they had the highest appraisal gap offer.
Yep. It matters. That matters.
Yeah. And, going to the, being transparent of what Melissa was saying is, a lot of borrowers I'm finding have a lot of their assets in cryptocurrency.
There you go, Liza.
We welcome diverse investments. That's great. However, the only thing is cryptocurrency is very volatile. And so if you're counting on that for your down payment, unfortunately you have to liquidate it. Like we can't pre-approve you and give you that underwritten pre-approval that now we're going to your realtor telling you, yeah, they're underwritten, it's great, they're good. And then all of a sudden cryptocurrency goes down and now you're out $10,000. That is something where, if you are using those assets for your purchase, you do need to liquidate them. Which unfortunately, if you turn out not to buy something, or if you don't need it, you liquidate it at that point, but that is something that's needed. So
that's awesome. Yeah, go ahead, Melissa.
Maybe this is I wouldn't call it controversial, but like a touchy subject for some. There's plenty of buyers and plenty of folks out there that have, your 8-to-5 job with state, city, federal government, county government, and they've had this retirement in there, and they're finally ready to buy a home. Are you seeing? And I'm just saying this because I know buyers are having to get really creative, and if they haven't had an opportunity to save a lot of money, are you seeing a lot of buyers using portion of their retirement savings to just to get over the hump and buy the house?
Yes, we are seeing some that are taking out loans from their 401k to get their down payment and their closing costs. So we are able to, or if they're buying an investment property or a second home, we do require 6 months of reserves for those properties. So they're having to use their 401k assets. You don't have to liquidate at that point. We just have to show that you have the funds available. But there are a lot more borrowers that are needing to use those retirement accounts. And if you are retired, you are able to use those as like an asset depletion. So if you're set on Social Security income, and maybe your Social Security income doesn't quite get you the income that you need to qualify for the mortgage, but you have an employment-related retirement account and you're over the age of 59 and a half, we can actually take those funds and we do a calculation of, I want to say it's like 80% of the value, and then we divide it by the term length. So we take 80% and then divide it by 360 for a 30-year loan.
Oh, wow.
And that we count towards your income, even if you aren't actively taking withdrawals from it.
Oh, that's really good to hear.
That's amazing.
Yeah, that's
Can you
awesome.
explain to the audience how people are utilizing it? Because maybe, because I'm making an assumption that I understand that you understand how they're actually using that money, and where they're using it in the transaction. And I know that you may not be able to dive into what the penalties are, but maybe there's some standard, things that you may know that could help them understand.
Yeah. So the 401k loan, so for those that are younger, you usually are able to take up to 50% of your vested balance. So that 50%, you can take that loan up to it. There is a penalty for doing that. I believe it's 10% for that. And then you do have to pay it back. So at that point, since it is a loan, we do have to take that into your debt to income ratio, since you are having to pay that back. So that is for those borrowers that are tight on the debt to income ratio, that may not be the best option for them. But yeah, a lot of borrowers are using it really to cover the down payment at this time and taking that loan against themselves to get the down payment. Because unfortunately, sellers just view someone with a 20% down payment or a 10% down payment to be more reliable than someone with a 3 or 3.5% down payment.
Right.
So.
That's so true. I'm so glad you touched base on that because I didn't know that you could count it as income. So that's without having to withdraw from it. So that's I learned
only
something.
if you're 59 and a half.
Only for 59 and a half. That's awesome though. That's really good to know. I'm going to have to write that down.
And only employment related retirement accounts can be used. So if you have your own mutual account, those cannot be used for asset depletion.
Right.
But 401ks, Roth IRAs, any employment related retirement account works.
Yeah,
so if you're
awesome.
self-employed, I'm not sure what the self-employment number is called. I don't know if y'all know the one where you can set it up yourself and deposit.
Yeah.
I'm not sure.
You're talking about self-direct IRAs? Something like that? Okay.
Yeah.
We need to have Danny back from 2 weeks ago, our CPA. Hey, Danny, are you listening? Can you join in, please?
Right. Well, it's crazy because we see all these moving factors, right? The lending aspect, the realtor aspect, the insurance aspect, even the CPA aspect. I mean, because like you mentioned earlier, Becca, I mean, there could be some tax implications. There could be some implications on some sense, right? On some level. So all of these professionals that we're gathering just to get the buyer ultimately to that goal to where they need to be at. And it's amazing that all of these things that need to happen, we just got to work together as a team, and that communication is so important. I know, Becca, you're awesome. I know you respond, you picked up the phone when I called you. So it is crazy. So that's just awesome. It just shows how reliable you are. And I'm hoping that people will definitely use you. I mean, if you need to use Becca for this, I'm going to link your information, Becca. When we end the stream, I'll have all your information, all your contact information there. That way people know where they can get a hold of you on. I'm hoping they do because you're awesome. So this is lovely that we're having to hear this and you guys are listening in on this conversation.
Yeah, and all of my borrowers get my cell phone number. I prefer them to have my cell phone. They can text me, call me, email me, whatever the case may be. We do also have a really great app for our realtor partners as well, where you can track the progress of the loan, as well as you get email updates as well. So
love an app.
I know, right? We all gotta have it.
Partnership. We know that we don't exist without y'all, and we're all working towards the common goal. So that open communication is definitely a goal of ours.
Yeah, communication is key for sure. I mean, aside from knowing what you got to do, communication is definitely key.
Yes, for sure.
Hey, Kina, do you still have the stats in front of you?
I do.
I'm just curious. So you were pulling February stats?
Mm-hmm. I've got February and January.
January, yeah.
Okay. What county? It's probably Austin. I don't know what other than Austin. Mm-hmm. What area? Can you give us a median home prices for all the areas for our listeners?
Oh, you know what? Yes. That one, you got that, Kina, or do you need me to?
I have it.
Okay.
So for the Austin Round Rock MSA, the median was 499,995, so pretty much 500. For Bastrop County, they ended at 443. Caldwell County was 314. Like I said, City of Austin was 565. Hayes County had a 42% increase. They are now at 427.
Wow.
I know. Travis County up to 541.
Yeah.
And Williamson County also had a big jump, 32%. They are now sitting at 479.
Oh.
So we're like in the 400s, 500s now. I mean, that's just the norm.
Yep.
That's crazy.
It's not to say that there aren't any homes in the 300s. It's just right now this is the median average.
Yeah.
And when you mentioned Caldwell County, I don't know if there was one for Lockhart in there, but I know specifically in Lockhart, I cannot believe, have you guys seen the hike in Lockhart?
I have a client that's looking, and it's just crazy.
They're
crazy.
like
it was like three something for the house.
There is this home listed. Okay, so there was a home maybe a week or so ago. I want to say, and if I recall from the top of my head, it was either between 450, 475. Went under contract. It was downtown by the courthouse in Lockhart. Did y'all see that one? Multiple offers.
And
it's beautiful.
It was beautiful.
Oh my
It
gosh.
had a lot of character in it.
It's just crazy to me that Lockhart, I remember when Lockhart was up and coming, and but people, I really didn't have a lot of buyers that wanted to venture out in Lockhart. And the one buyer that I did have, they saw this brand new built home, also in downtown Lockhart, $210,000. It was a beautiful home, a third of an acre, brand new construction, $210,000. And they were like, that's kind of pricey. You know what I mean? And looking back now, it's just crazy to see the 400s now in Lockhart.
It is because you think of it as a town, like a way outskirt town, you know, like a drive. You would never imagine. Yeah. I couldn't believe it when she was like, oh, that's where, you know, I'm interested in. I started looking, I was like, okay, well, maybe not.
It's just
much. It's a little higher than I anticipated it would be.
It's everywhere now. I mean, Seguin, you're talking about Seguin, New Braunfels. I mean, Gerald, gosh, I mean,
Logan.
All these areas. I'm like, wow. I mean, Central Texas, really. It's central. I mean, that's where people.
Rockdale.
Yeah, for sure. I mean, I think a lot of it has to do with not only the influx of people that are moving out of state, but also the ability to work remote. Still, I think some people are still, and people are okay living not in the city, but you know what I mean? Yeah, go ahead, Becca, tell us about that.
I mean, I myself, that's what I did. I was living in Denver and they said, hey, you can work remote. And I was like, well, why am I in Denver when all of my friends are in the Austin area?
Yeah.
And then I was okay with living in Kyle, which now I'm like, well, heck, at these prices, I'm glad I bought when I did last year. But I was like, I don't need to be in downtown because I work remote and I just need my office and that's it.
Yeah.
So.
Yeah, and I think people are fine with that. I remember there was a time when people wanted to be super close. And not that they don't, they still do, but they wanted to be really, really close to downtown Austin. And or within 15 minutes, within 20 minutes. Now it's like, I'm okay if it's an hour drive, right? That 1 hour is like that magical number, right? And that kind of, the 1 hour drive, I think, for me at least, because I have, you know, a sister that lives in Seguin and another one in New Braunfels. But for me, it's been about Seguin, New Braunfels border. And then all the way up to Gerald. I think Gerald's about the same. But I'm just thinking about even when I see homes in Granger or Taylor, I'm like, wow, all these cute homes popping up, and their prices are pretty pricey too. I mean, it's all up there, but I mean, I think buyers now also are much more savvy, right, with the buying process. They're well informed with the information that we have out there publicly as well. A lot of them use these public platforms to get an idea of where homes are at, what it might be worth, right? And obviously, we as professionals know that any of these platforms that indicate some sort of price of what it's potentially worth or an opinion of value, it really isn't, it doesn't equate to what the appraisal will say, but it does give you a general idea of what, you know what I mean, what that amount could be. It's just crazy, the amount of information out there. There's been a lot of moving parts, changes in the past couple of years that I think a lot of this is driving where we're at right now with our market. What do you guys think?
I think like it was scarier last year or like mid, you know, well, let's just be honest, like the tail end of 2020 and all of 2021, I always felt super nervous because the buyers were happy at that time because they were just very anxious to get a home, to pay, you know, the difference between the opinion appraisal value and the sales price.
Yeah.
Now I feel like, yes, they're still paying over list, but there are now comps to support those prices. So, you know, as long as they qualify for that amount, you know, I feel like at some point it's just we gotta, you know, calm it down a bit, right? Because
I would love for it to calm it down a bit too.
Right? I mean, if we could just steady Eddie it for a little while. I know this is unrealistic. This is my wishful thinking. For me, that equals buyers that are from this area that are able to afford homes. And that's why I became a realtor, because I wanted to help people into homes. And it's just super sad to not be able to help as many people that are native to the area. But, you know, all I can say is, you know, save your money. And, you know, some of the conversations I'm having with buyers now are like, okay, this isn't like your forever home. It might be like a little townhome, a little condo, but it's real estate, right? And then you can live in it for a little while. And, you know, if you're in an apartment or you're sharing, you know, rent with someone in a duplex, like whatever it is, you know, get your own little something, you know, right now, like, don't wait.
Right. You know,
her home later.
I have to agree with you on that, Melissa. I mean, I think maybe I'm biased. I don't know, but I do firmly believe that real estate is probably one of the safest investments. Not only that, I mean, considering all factors with how the market is going, where Austin is going, I mean, gosh, I know, Becca, that you mentioned earlier, I want to touch back on that you mentioned with the interest rate hikes, that some buyers have been priced out, right? And what I'm seeing is that last year, the year before, with all the inflation, the buyer fatigue, we've had to really implement either new ways or new terms to help buyers. And I think also lenders have had to also implement like a faster close, right? Or do this, do that, so you can win an offer. I think eventually, once we're seeing a lot of buyers priced out, I think a lot of people are already seeing that buyers are being priced out because of the interest rate hikes. I think there might be something coming soon to where those same buyers, there will be programs accessible to them to be able to purchase in this market. I'm hoping to touch base soon on that when more information comes out, but I do feel that there's good people out there working on programs to help buyers get into homes that have been priced out. But yeah, I don't want people to think that it's over for them. I'm priced out. That's it. You know, I think there's innovative people out there.
Us a cliffhanger.
I am. There's stuff out there, guys. So I don't want people to give up, because aside from being able to win a home, and I mean, waiting for what, right? What if you're ready now to buy? You know what I mean? Implement everything that we're saying, whether you use us or not. Implement what we're saying, because look, if buyers are already doing this, like I said earlier, you need to maybe do one up better. You know what I mean? Because other buyers listening, they're probably gonna be like, oh, I need to implement this. But always finding ways and being creative to put yourself in a better position. And I'm just so thankful that Becca, thank you for sharing what you know and how you help your clients win more offers and helping them. And not only in Texas, she helps them all over the place. I think you mentioned sometime in Florida and oh my gosh. So you're probably super busy.
New Mexico, Arizona, Oklahoma, Utah, Florida, and Texas.
Oh my gosh.
Wow, that's awesome. That's awesome.
That's crazy. So you're super, super busy. I appreciate you taking the time to be here today with us.
The Texans are near and dear to my heart since I'm a local here, but you know.
Hey, she's like, now I have to run.
I know. I feel
all these messages.
I know all the text message. I put anytime we do a live stream, I put my phone on, I do like a focus, and I labeled it live stream just so because if I hear my phone going off, I'll start looking at it. I'll be like, what's going on here? So, but yeah, Becca, thank you so much for joining us. I do appreciate you. I'm going to have to give you a huge shout out on social media. I love you for that forever. I'm very, very grateful for that. And guys,
for those tuning in, we did have another guest scheduled that he had a family emergency. And I don't kid you when I say this, I said, Liza, who can we get to come on last minute? Y'all know we go live at 7 p.m. It is 6:46. I think it was 6:46. And we usually come in early to work out our tech kinks. And I said, who do you know? Let me call so-and-so. And she's like, hold on. And she's calling Becca at 6:46 and saying, look, this is really awkward. And I don't know what you're doing, but we're going to go live on YouTube. And we need you at 7 o'clock. Can you do it? So, Becca, you're my girl. Thank you so much for coming in. Literally at the 11th hour. We appreciate so much.
That's amazing.
My pleasure.
Oh, my gosh.
And thank you.
for putting on makeup on record time, right?
Yes.
Yeah, I have my makeup on. I have my mirror here. I put my makeup.
Everything was
Everybody
going
knows.
crazy. Like Melissa
and I
changed
are
her
in
shirt. Melissa's like, I don't like my shirt. Let me change. We're
Y'all
all
should
like
ride with
crazy.
Melissa with all her vanity set in her car.
I know.
I was like, oh my God.
She's always been like that. That girl in her office, in the car, you name it. It's there. She has her set, a purse for every one of those places. So
We need to record some of these bloopers, but y'all, just so you know, every other Wednesday Liza and I come in at 6:15. And what am I doing every time, Liza?
your
The two
makeup.
things I'm
She
doing.
puts her
And what
mirror.
else?
Her mirror is like right here. She's talking to me, but not talking to me.
And then what else am I doing?
You're putting on
Eating?
your makeup. You're eating. You're putting on your makeup. Feeding your granddaughter. You're doing it all.
It's crazy. We should go live and let them really see what's
Right?
going on.
They're gonna be shocked. Like, what is going on? I thought this was a real estate channel. I'm seeing people putting on their makeup. No.
It's crazy.
Oh my
Thank
goodness.
you guys for tuning in. And if you don't tune in and then you watch us later, we thank you for that too. And we just hope that y'all continue to join us as we bring you the information on the real estate market in Austin, bring in guests, provide value, have good conversations, and hopefully we can get some audience engagement. We would really love that. And so, yeah, we just appreciate y'all so much.
Yes, thank you so much, guys. Again, we are ATX Homegirls. And thank you again for joining us during our live stream with the lovely Becca Donovan. Thank you so much. Guys, remember, please like and subscribe. We are a brand new channel. I was going to say child. Brand new channel. And we're bringing valuable content to you, real life scenarios. It's all unscripted. These are organic conversations about the real estate market here in Central Texas. So again, thank you. And we will see you not next Wednesday, but the Wednesday after that at 7.